Joining us now is Jasper Ondap, equity analyst at Regina Capital Development Corporation. Good seeing you again, Jasper. Welcome back to the program.
Hi, good morning, Kathy. Thank you so much for having me.
All right, so what do you make of the peso's record fall on Wednesday and the impact it's having on equities?
Yeah, so I guess a lot of economists have already stated and analysts have already mentioned this a lot before, right? So this depreciation is not just because of internal factors, not just because of corruption scandals and the like. It's really more on external factors that we've seen. If you have seen like the U.S. Dollar index for the past few days, it's also risen up. And if we cross check it to different currencies, the USD JPY, the Canadian dollar, and even the Swiss franc also rose. So that's, I think, what's happening. It's just a bit of a stronger dollar. And when it comes to the market, what we usually see is when that our currency actually depreciates, it prompts selling from our foreign investors because of the currency risk, and they are putting more. They're putting more risk as they put more dollars in our country, right?
Is the peso
But
at 60 a risk?
yeah, definitely. Because
Why?
if you consider, if we look back a year ago, maybe a few years back, we have reached like our currency was at 58 levels. And at 59 levels, if you are foreigner putting in $1 million, $10 million, definitely you're already losing money, right? So that already excludes your capital gains or your dividends because the dollar conversion you're actually already losing from going back to your country. But right now in 2026, what we're looking at is somewhat a match made in heaven, right? Because we've started the year already at 59 levels. That's quite all. We reached all the all-time high already, and there's only like a little room for going to 60, and that's a little more foreign currency risk and more of an upside potential for foreigners when the currency actually pulls back below 59 levels. And why I said it's a match made in heaven because we are one of the markets that actually closed in the red for 2025, putting our valuations quite low. And I guess what's happening in January is already a bargain hunting with a very on the top currency, and we have a quite bottom out market already, right?
Yeah, but when you take a look at the foreign institutional investors, they're doing something else with the money. They've been persistent net sellers amid the political noise, the corruption probes, fiscal concerns. So, how are you looking at the FIIs for this year? Is there going to be a change? And how does the Philippines compare with the rest of the ASEAN right now?
Yeah, so definitely I'm pretty much optimistic all the time when it comes to foreign investors, right? So when our foreign institutional investors flows, we're really since 2021 we've already been net selling since 2021 to 2025. That hasn't changed. It's really foreign net selling, but if we compare ourselves to our neighbor peers who are already net selling more than $5 billion a year, $3 billion, $2 billion a year, the Philippines only has or not even reach the 1 billion mark in foreign net selling. And that gives us quite of a silver lining, putting us a better edge. Is that an optimism that we see? And for 2026, we've already seen that even the peso has started at 59 levels. We've seen foreign net buying for a couple of days now and weeks. Last week we've seen $2 billion, 2 billion pesos in foreign net buying. And Monday we've seen 500 million. Tuesday another 500 million. Yesterday we have almost reached 300 million. And if that's not an optimism for investors, then what is it? Is it just bargain hunting? They're just buying because our market is low. That's something we have to look
Yeah, in its
forward.
early days. We got about a minute. So, which sectors do you think would be most attractive right now? Is it the financials, property, consumers, utilities, REITs, given the combination of lower rate expectations and still soft growth?
Yeah, so we're looking at economics. We're looking at benign inflation, still sitting below 2%. So a lot of our consumer staples are actually giving up pretty good dividends, pretty much standard growth with above close to 10%. Some are even exceeding 10%. So consumers might be there, as well as the banking sectors with a little room only for easing. So easing cycle might be over, putting banks at the higher end. Next would be REITs, probably REITs because the yields are quite attractive if you compare it to the 1 year returns now of certain fixed income securities. And I
All right.
guess a lot of those are to look forward this year.
Okay, we'll keep tabs of those. Thank you so much, Jasper Ondap of Regina Capital Development Corporation.